Okay, the fifth and final part of problem exercise 320, which I'm sure you're starting to think of as the exercise from hell, is closing the temporary accounts. Well, I need you to refer back to the income statement. We have the revenue accounts, we have the expense accounts. We need to close those. When we prepared the financial statement, this is a formal document. This goes to our client, our bosses, the financial press, the investors, etc. But we have to close these accounts for accounting purposes. So our revenue has a $70,000 credit balance. We need to debit it to reduce it to zero and credit retained earnings to make it balance. Then we have salaries expense, which has a $27,000 debit balance, so we need to credit it $27,000, reducing it to zero. Our rent expense has a $3,000 debit balance. We need to credit it to reduce it to zero. And our supply expense has a $25,000 debit balance. We need to credit it to reduce it to zero. That's a total of $55,000 that we now debit to retained earnings. 55, I wrote 50, excuse me. We now have the dividends that we paid of $2,000, which carries a debit balance, so we have to credit dividends for $2,000, and we have to debit retained earnings for $2,000. That closes all of the revenue accounts, all of the expense accounts, and the dividends account. They're all down to zero. We're ready to start a new year, and off we go.